Hey everyone, welcome back to Corporate Decoder, where we break down the confusing world of corporate finance. And today we're looking at some very recent and perhaps a little spicy private transactions from C2 Blockchain Inc. So what does an 8K filing mean for a company like C2 Blockchain? Think of it as a company's way of telling the world something important just happened and you need to know about it right now. It's not a regular checkup like their quarterly reports, but more like an emergency bulletin. And in this case, the big news is about them selling more stock and how they got the money for it. Before we dive into the details, if you're getting value from these breakdowns, make sure to hit that subscribe button and ring the notification bell. Also, we've got a fantastic community over on our Discord server where we discuss these filings, so check out the link in the description below to join the conversation. Alright, let's get to it. C2 Blockchain Inc. is letting us know about a couple of private sales of its stock, meaning they weren't sold out in the open market to just anyone but to specific select investors. The first deal we're looking at happened on August 10th, 2025. C2 Blockchain sold 1 million shares of its restricted common stock. Now, restricted is a key word here. It means these shares can't be freely traded or sold right away by the investors. The price, a modest 3 cents per share. That brought in 30 immediately, resell them. Just a few days later, on August 14th, they did it again. This time they sold a much larger chunk, 12.5 million shares of restricted stock. These were sold at an even lower price, 2 cents per share, raking in $250,000. Again, the buyers were accredited investors and the shares are restricted, meaning they come with strings attached for the new owners. So where is all this money going? The company states it's for general corporate purposes and working capital. In plain English, this means they're putting the cash towards keeping the lights on, paying salaries, and funding their day-to-day operations. It's the essential stuff that keeps a business running. Now, why are these sales unregistered? The filing explains they're relying on a special rule, Section 4 ATE2 of the Securities Act and Rule 506BE of Regulation D. Essentially, these rules allow companies to sell securities directly to a select group of sophisticated investors, like these accredited investors, without having to go through the long and costly process of registering the offering with the SEC. They say it wasn't a public offering, but a private deal. This usually happens when companies want to raise money quickly or when they're a bit too small to warrant a full registration. As for exhibits, well, this filing is pretty straightforward. It mainly points to the cover page interactive data file, which is essentially the document in a format computers can read and analyze easily. Nothing too exciting here in terms of new financial statements being presented in this specific 8K. As the core of this report is about the stock sales themselves, and the report is signed off by Levi Jacobson, the Chief Executive Officer, on August 20th, 2025, confirming that the information provided is accurate as required by law. Now, let's talk about what this all means and what we can infer from these private placements. First off, we see C2 Blockchain is checking the box for being an emerging growth company. This is important because it means they can take advantage of certain regulatory relief, like not having to follow all the same accounting standards as bigger, more established companies. They also have the option to delay adopting new accounting rules, which can sometimes make their reported financials look a little different or maybe even a bit more favorable in the short term compared to companies that have to follow everything strictly from day one. They've chosen not to use the extended transition period for new accounting standards, which is interesting. It suggests they're either confident in their ability to adapt quickly or they want to present their financials as cleanly as possible from the start. What's striking here is the price per share in these private placements. Selling stock at 3 cents and 2 cents a share isn't very high. For context, when a company first goes public, its stock usually trades for significantly more, unless it's a very fairer than the current market valuation. These unregistered sales, while legal and common, are also a sign of the company's financial situation. Raising $30,000 and then $250,000 through private placement suggests the company isn't generating enough cash from its operations to fund its needs and is turning to private investors. This isn't inherently bad, especially for a growing company, but it does raise a flag about their current revenue streams and profitability. Relying on private placements means giving away ownership stakes, which dilutes the value for existing shareholders. The fact that these shares are restricted means the investors can't just dump them on the open market. C2 Blockchain is protecting itself from a flood of newly sold shares that could drive the stock price down. However, it also indicates that these investors are likely long-term believers who expect the company's value to increase significantly. Looking at a company's overall strategy based on this, they seem to be in a phase of growth, or perhaps trying to stabilize. Raising just $280,000 in total from these two transactions points to a relatively small operation, or a very focused funding need. It's not enough to fund a massive expansion, but it could be crucial for covering operational expenses or a specific project. Now, for some general thoughts on C2 blockchain based on this filing. The company is operating in the blockchain space, which is known for its volatility and rapid innovation. Many blockchain companies are still finding their footing and often rely on external funding. The low per share price in these transactions might be a signal that the company is early stage or perhaps facing challenges in attracting larger institutional investors at higher valuations. A key risk for C2 blockchain, like many in this sector, is market sentiment and regulatory changes, which can significantly impact their stock price and business operations. The company's ability to generate revenue and prove its business model will be crucial for its long-term success, especially if they plan to raise more capital in the future or become profitable. In conclusion, C2 Blockchain is executing private funding rounds to support its operations. The low share price and restricted nature of the shares suggest a focus on attracting long-term investors, and perhaps a need for capital that current operations aren't fully meeting. While these private placements provide necessary funds, the company's future success will hinge on its ability to grow its revenue, manage its expenses effectively, and navigate the dynamic blockchain industry. So what's your take on these private placements? Do you see them as a sign of opportunity or potential trouble for C2 blockchain? Let us know your thoughts in the comments below. If you found this deep dive useful, smash that like button. And don't forget to subscribe for more corporate insights. And seriously, join our Discord. The link is in the description. It's a great place to chat about these filings. Thanks for watching, and we'll see you in the next one.